Welcome back to Cost and Management Accounting 86. In this video, I want to look at a question from the question paper of June 2025. So we are going to look at job costing. So our question reads, Lowlands manufacturers makes carpet tiles on special order. They are currently busy with two special orders, namely job LMC 121 and job LMC 122, for which they are using the job costing accounting system for recording. Uh, Job LMC 121 was started during June 2022, while Job LMC 122 was only started in July 2022. The following information was extracted from their records for the month ending 31 July 2022. So we are given a list of balances that we have, and then beneath that, we have got also additional information. So on our question part, our first part requires us to prepare the job cost statement for the completed job only with 9 marks. So the completed job, we check which one do we have as the completed job. So you see that if you go to the last point that we have here, it reads at the end of July 2022, only job LMC 121 was complete. So we're going to complete a job cost statement for job LMC 121. So going to our other section, this is going to be our statement that we're going to use. So of course, in our statement, we are supposed to start with a balance at the beginning, which is balance BD. So in terms of our balance BD, we check in the question what we have for job LMC 121. So we go there, you'd see that this is the job that is only complete, that is LMC 121. So for that, the production control balance that we have at the beginning will apply to that job. So we check according to what we have, we'd see that according to our production control account at the beginning, that is at 1 July 2022, we are given it as 80,000. So that is the balance that we're going to start with in the statement. So we come here, we indicate a search whereby we have 80,000. And then from there, we are supposed to look for all the costs that are associated with our job LMC 121. Of course, we refer to the list of balances that we are given, but if you go down, you'll see that uh, for material issued during July 2022, it's also part of the cost. We have got job LMC 121, which is 75,000. So we're going to include that one as our direct material. So we come here. So remember, the amount that we have is 75,000. So from there, we check another cost of that job. We go to direct labor. Direct labor, we're giving them as direct labor hours. It's not the amount. For 121, we've got 25,000. And then beneath that, we're given total direct labor cost for 150,000. So basically, we're going to add 25,000 plus 15,000. So if you do that, you're going to get your answer as 40,000. So 40,000 becomes the denominator, and we make a fraction by saying the job 121 is 25,000. So we are going to say 25,000 over your 40,000 times the total labor cost 115,000. So we do that, we are going to get an answer of 71,875. So this becomes our direct labor cost for a job LMC 121. So we indicate as such, we come here, we indicate as our direct labor. Whereby we've got 71,875. Then from there, we check in terms of other costs that we can also include. Going down, we see that we try to see what we have. So in terms of applied overheads, if you come to the first point on the information says overheads are covered at a predetermined rate of 450 per unit produced. They are recovered at a predetermined rate of 450 per unit. So the per unit amount is 450. So the number of units for job LMC 121 is 12,000. So to get the total applied overheads, you're now saying 12,000 times 450, and we're going to get your answer is 54,000. So 54,000 becomes the applied overheads. So we come, we indicate as such. Whereby we got it as 54,000. So we now add to get the total production costs, so we can rule off. So if you add 80,000 plus 75,000 plus 71,875 plus put 54,000, you get a total of 280,875. 280,875. Yeah, that becomes our total production cost. So beneath that, we go to the other costs that we have that are not part of production costs. We check what we have. So if you come here, you would see that we have got selling and administration costs that we are given. Selling and administration costs amount to 45,000 rands. These costs are allocated to job LMC 121 and job LMC 122 in the ratio 3:1. So that is what we have. So it means the proportion of job LMC 121, we are going to say 3 plus 1 becomes the denominator 4. And then the numerator for AMC 1 obviously is going to apply 3. So we say 3 over 4. And then we multiply by the total selling and administration cost amount, which is 45,000. So we calculate, we see what to get. We're going to get it as 33,750. So this is the same figure that is supposed to come here is our selling and administration costs. And we got it as 33,750. And of course, we now go to the total costs. We are supposed to add to get our total cost. So say 280,875, 875, and then we add our 33,750. So we add, we are going to get your answer as 314,625. So with that now, we go back to the information given. So you'd see that from the information given, we check if we have anything that is going to lead us to the calculation of our selling price. So we are given a markup on costs as job LMC 1121 is 80%. So we deal with our 80%. So remember, we are supposed to say our 80% times the figure that we have for total cost, so that we get the markup of value, which is the profit. So if you come here, we are going to say our profit, whereby the percentage for our job LMC 121, we are given it as 80%. So if you come here, we're going to say 80%, and then we multiply it by 314,625. And then you get your answer as 251,700. So we are supposed to add total cost plus profit to give you the selling price. So here you get your selling price. So if you say 314,725 plus 251,700, you're going to get your answer is 566,325. So that's our sale price for our job LMC 1-to-1. So we go to the next part, whereby the next part requires us to prepare the material control. So basically, we've got the material control. We also have manufacturing overheads control, applied manufacturing overheads control, production control. So these are the accounts that we have. And finally, on 2.3, we have to move on to the next part. So we check now according to our opening balances. In the question, if you come here in the question, you're going to see that we have got balances that we have in the beginning, whereby we are given the production control 80,000, which we have already used in the preparation of job cost statement of job LMC 1-to-1. And then we also have material control. It's a question mark. Question mark means we're going to find it as a balanced figure, so we can leave that one. So it means that for material control, our balance BD, if you come to material control, we are having our balance BD on the debit side. And it's a question mark, which means we leave it blank, and then we find it as a balanced figure. So we go to the next one. In terms of the opening balances, we check in terms of what we have. So we've got the material control balance that we're given is 3107-2022. Remember, 0107 is at the beginning. So this one is going to be the balance at the end. Balance at the end, which is our 3107-2022. So it's going to be our balance CD. So we put it as our CD. And then we check in terms of other entries that we have. Remember, for material, we are given 120,000 as material purchased for cash. So it's going to be to the debit side of the material control. So the double entry on that one is that we debit material control and then we credit bank. So in this case, we are going to the debit side of the material control and enter 120,000. So we come here and we say bank, and the amount that we have is 120,000. So we check in terms of other entries. We do have material issued. Material issued, remember they should be removed from the material control because they've been issued. We have 75 plus 50,000. If we add the two, we are going to get 125,000. So material issued in total, we've got 125,000. So we go to the credit side of the material control. We go to the credit side of the material control and enter our 135,000. And remember, at this 135,000, the double entries that we are crediting material control with 125,000, and then we are debiting a production control. So production control again, before we enter this entry, we check in terms of the opening balance of production control, which is given is 80,000. So we go and see on the production control as our opening balance. So in terms of our production control, remember we said we've got a balance BD of 80,000. So we say on the debit side, balance BD of 80,000. And then, of course, we can now enter the double entry of the of the 125,000 of the material that are being issued to the production control. So we credit the material control 125,000, 125,000, and it goes with production control. Uh, 125,000, and then we debit production control. And it's coming from a material control. We are saying 125,000. So that one, we entered that one for material issued. So on material issued, we have entered it on the credit side. And with that, we check if we've got any further entries that can be input. So we can go on other entries that we have. So of course, we have entered the material purchase for cash 120,000 material control. We are saying this is the balance CD at the end. So we can go and put it in the material control as our balance CD. So it's going to be on the credit side, it's a balance CD. Is 40,000. 40,000. And then from there, we've got the material issued that we have just entered. Then we've got direct labor hours, labor hours. We'll check in terms of our direct labor hours. Remember, we're given it as a number of hours, and we said with the total direct labor cost is given beneath that is 100 and what? 115,000. So with that, we go to we are supposed to enter the total in the labor control. The total of 150,000, 115,000 should be debited in the labor control as our direct labor. So we go to the production control and we are saying labor control. Uh, 115,000. And we are supposed to enter it in the labor control account, which we are not given in the question. So we can just ignore the second entry. So we go to the next one. After this, we've got total and the labor cost we entered, and then we've got manufacturing overheads incurred during July 2022. We have them as 90,000. So they are supposed to be entered on the debit side of the manufacturing overheads control account as actual manufacturing overheads. Actual manufacturing overheads, which we are given, is 90,000. So we go to the debit side of the manufacturing overheads control. So we look for that account. Manufacturing overheads control, and then on the debit side, we are saying actual manufacturing overheads, which is supposed to be PEG, which is we are giving them as 90,000. And after the actual manufacturing overheads, we go to the next part whereby we are given total number of units are produced. Total number of units are produced. We are given it is job MC, we are given 12,000, 121, then 122. We are given them as 10,000. So if we come at the first point, it reads overheads are covered at a predetermined rate of 450 per unit produced. So we need to calculate the applied manufacturing overheads, which we are supposed to credit in the manufacturing overheads control account. So 450, then you multiply it by the total number of units produced, which we have 12,000 plus 10,000 to get, if you add the two, you get 22,000. So here you multiply by 22,000 to get the applied manufacturing overheads. So if you calculate, you're going to get 99,000. So you credit it in the manufacturing overheads control account. So we check in terms of manufacturing overheads control account, which we are having here. So we go to the credit side and we are saying applied manufacturing overheads. Applied manufacturing overheads. And the answer that we got is 99,000. So remember, we also have if the question we try to see in terms of the other, we've got applied manufacturing overheads control. Applied manufacturing overheads control, which we are supposed to also debit with the amount that we got here. So we are saying manufacturing overheads is coming from manufacturing overheads, which we are given as 99,000. This manufacturing overheads on the debit side of the applied manufacturing overheads account should also be transferred to the production control. So we are saying production control. And then for the production control, we are going to transfer the 99,000. So anything that is debited on the in the applied manufacturing overheads account, whenever we debit the applied manufacturing overheads account, we transfer the figure to the production control. So we are supposed to transfer this figure to the production control. We go to the debit side. And of course, it's coming from applied overheads. Applied overheads of 99,000. So basically, that's what we have for that part. Then with that, we check in terms of other entries that we need that needs to be done according to the balances that we are given. So we can refer back to information that we are given in the question. If you come on the last point, it reads at the end of July 2022, only job LMC 121 was complete. So in that case, we see that the total production cost is going to represent the finished goods of job LMC 121. This is the only job that is complete. So we only take the total production cost of LMC 121, and then we take the total production cost and we're supposed to credit it in the production control account as finished goods, since it's only the one that is finished. So we have calculated the statement for job LMC 121 on this part, whereby we found the total production cost as 280,875. So this 280,875 is supposed to go to the credit as a representation of finished goods, since it's the only job that is complete. So we go to the credit side of the production control, and then we are going to enter it as our finished goods. And remember, the amount is 280,875. So with that, we can now balance our account, whereby we are now finding the balance sheet, which is obviously will be on the credit side. So on our production control, if you add total of the debit and the credit, you are seeing that the debit has got a greater total with a total of 119,000, which is also supposed to come on the credit side. And then you subtract the finished goods amount to get the balance CD, which is going to be 138,125. And it becomes our balance CD, which is also supposed to come here as our balance BD. Is 138,125. So that's what we have on production control. And of course, we have got also the applied manufacturing overheads account. which we have already closed. So we can as well close it. Since we've got the same amount of the debit and the credit, we can just close it. Then we go to the next one, which is the manufacturing overheads control. So on the manufacturing overheads control, we've got 90,000 on the debit, 99,000 on the credit. So balancing figure comes on the debit side and it becomes the cost of, it's supposed to be transferred to cost of sales. Is 99,000 minus 90,000 to get 9,000. And of course, we are supposed to have our double lines. Which will give us a total of 99,000. So we move on to the next account, which we have is material control. So on material control, we are going to find the balance BD as the balancing figure as the CD is already given. So 125,000 plus our 40,000 is going to be the bigger total. It will give us 165,000, which will come both sides in between the double lines. And then we subtract 165,000 minus 120,000 to get the balancing figure of 45,000, which is CD should also come on the opposite side. Here's our BD. So that's our material control. So this is, of course, we also have the production control, which we have already balanced. So it means this is the last part of this part. Then we check according to our questions. Remember, we also have the 2.3, prepare the account of job LMC 122 only in the cost ledger. So it means we are going to come up with your T account. So we check in terms of our cost ledger of job LMC 122 with this here. So we're not going to have any balance BD because this job is not yet complete. So no balance CD. So we only check the costs associated with our job LMC 122 and enter them on the debit side. So we check according to the question. So now we see that according to the question, we have we check according to what we have. We've got the material issued 50,000. For job AMC 122, we've got 50,000. So it goes on the debit side of the cost ledger. We go to the debit side and put 50,000 as our material issued. So to be coming from material control. So so we are saying material control, and the amount that we have is 50,000. Then we check the next one. We've got direct labor. So on direct labor, remember we are supposed to apportion. We've got a total of 40,000 by saying 25,000 plus 15,000. So it becomes our denominator. And then our numerator becomes our 15,000 for job AMC 122. And then we multiply by the total direct labor cost, which is 115,000. So in this case, we are calculating the labor control figure, which we are going to get as 43,125 rands. So we go to the dev side and put it as our labor control. Labor control is 43,125. And of course, we check in terms of the next entry that we are going to check is on applied overhead. So we go down and see So we see that now the question says that overheads are covered at a predetermined rate of 450 per unit produced. So it means for our applied overheads, we're going to say 450 times number of units in job LMC 122, which is at 10,000. So we calculate, we multiply by 10,000, which we are going to get as 45,000. So basically, this is what we have for this part. So we go now again to the debt side, and we are saying these are applied overheads. Applied overheads, we get them as 45,000. So these are marks at the end of what we're supposed to put on the debt side of job LMC 122. Then we add to get the total. And then with that, we are supposed now to add to get the total, and then we get our balance sheet. So here we get our balance as CD. So if you add 50,000 plus 40,125 plus 45,000, you get your total of 138,125. So basically, that's what we have on that part. And then this also comes on the opposite side. And the same figure is now our CD. Since we don't have anything on the credit side, and our CD comes as our BD, the opposite side. So this is what we have, guys, and this marks the end of our question on job costing. Thank you for listening, and hopefully the video was helpful. Let's meet again in the next video.